Good morning, everyone. This is Ryan from the SIA Charts team, coming to you with our first edition of our stock analysis series. In these weekly videos, we'll be featuring a stock that's made headlines because of earnings, analyst upgrades and downgrades, or other corporate events, and breaking them down technically, as well as seeing where they rank within our proprietary platform. Our views are strictly our own and meant for educational purposes only. They should not be used as trading advice or direct trading signals. Today we're going to cover the hot Chinese electric car producer pronounced NIO, ticker symbol NIO, trading on the New York Stock Exchange. The stock popped last week, up 32.6% over the prior week's close due to a favorable upgrade from an analyst at JP Morgan. The stock also had two other recent positive upgrades in August from UBS and Morgan Stanley. The rise in share price has outpaced Tesla's in 2020. As of Wednesday of last week, NIO had risen 612%, well ahead of Tesla's 375% rise. Their valuation at 24.4 times sales vastly exceeds that of Tesla's at 17.1. NIO continues to show tremendous strength and has been a recommended buy in our system for almost 6 months now. But let's look back and see where you could have gotten in prior to these larger moves using our market intelligence software. As you can see, the stock has moved from down around the $2.50 area to right below $30 over the past year. What you see overlaid on their candlestick chart here is our equity action call, which is our proprietary indicator telling us when we should be in or out of the market, with 3 colored zones: unfavorable red, yellow neutral, and green favored, with specific rules around each that I don't have time to cover in this short video. Now, zooming into the end of March, when we reached a market bottom after the panic sell-off from COVID-19, you'll see that our system produced a favorable call to action towards owning long equity positions again on April 30th, when our action call moved from the neutral yellow zone to the green favored zone, right here. For this example, let's assume that an advisor was looking to add a position within the automotive sector to a balanced portfolio. Moving over to the summary page now, let's look at that automotive report back on April 30th and see where NIO ranked. So changing the date back to April 30th of 2020, we'll see that NIO ranked 12th out of 51 names within this automotive report. Being that it ranked within the green favored zone of this report, within our guidelines, a new position could definitely have been added at this time. However, if you wanted to wait until it improved to the top of the report and above other companies, such as Tesla, ranked in the 4th spot here, you would have waited until June 9th to initiate that new position. As you see, NIO has moved to the top spot in the report. So looking back at the chart, we go down here to our candlestick chart. Let's go year to date, and let's zoom back into that time period and see where we could have gotten in on those 2 dates. So if you see on April 30th, right here, you could have gotten in at the $3.63 price range. And if you'd waited until June 9th, which is right here, you would have gotten in around $6. So that's a 366% move that could have been captured here using our software. If you're a financial advisor and wish to see the power of our market intelligence platform for yourself, please sign up for a free, no obligations 3-week trial by emailing us at info@SIACharts.com or calling us directly at 1-877-668-1332. Until next week, take care and always strive to manage your risk in the markets effectively.